Hey everyone, this is Daniel from the Zadigan Group and Pre-Homes, here to walk you through our free ebook called Which Condo is Worth My Money. Now, this is a fantastic ebook. I love sending this over to first-time home buyers or people that are first-time investors and maybe aren't fully aware of the different types of markets that we have, that being resale, assignments, and pre-con. So it's a great ebook to get fully informed on the pros and cons of each. That way you guys are able to make the best decision for you. A lot of times, sometimes people aren't fully aware of these markets, so they could be missing out on something that could be a good fit, or they are misinformed and could be missing out on, could be making a wrong decision on the wrong type of asset type. So let's get into this here. Fantastic ebook, guys. I love sending this out to everyone, even if they say they already know it. I like to send it out anyways, just to make sure that you understand full pros and cons of each. So let's start with the basics here. Condominiums come in all shapes, forms, and sizes, and they are categorized by the time of their sale. So what does that mean? We've got resale condominiums, we got pre-construction, and we have assignments. So we're going to look into a deeper dive into these, the pros and cons, what they are, and so on and so forth. First up, we have resale condos. Resale is the market that most people think of when they think of real estate. Those that are not aware of the other types, resale is something that's existing, a pre-existing building or property that you are buying and it's being resold to from from the seller. It is available for immediate possession and can be used as a rental property right away if you're an investor. And oftentimes there may even be tenants in there already that from an investment standpoint, you can assume and start accumulating rents right away. So looking here at the pros, you got 4 of them here. Number 1, resale condos are a tangible asset. You'll understand what I mean by this when we look at the pre-con and assignments, but this is something that's existing. It already exists and it is ready to move in. The asset is tangible and not just a contract at the time of sale, like it is with pre-con and assignments. Number 1. Number 2, it is ready to move in. So if you're looking for something to live in and you want something right away, then resale is a great option for you. Or if you are an investor and you're looking to make some rental income right away, then resale might be a great fit for you as well. Number 2, number 3, it's easy to pick loans. What does this mean? It is easier to pick a financing option for a resale condo because everything is based on today's market, today's rates, today's loan interest rates, and today's income. And number 4, it is more affordable. So the resale market is more affordable, is the cheapest asset type compared to assignments and pre-construction. So if you're just starting out, then this may be a good fit for you. Now, what are the cons? You need to adjust to what's available today. So what does that mean? That means that you're at the mercy of what is in the market, what listings are in the market. If you had a specific floor plan or a specific suite number in a building that you were looking for, unfortunately, if it is not up for sale, then it is not up for sale, and you're at the mercy of what is available in the market. Number 1. Number 2, bidding wars, which I'm sure a lot of you buyers that are looking in today's very, very hot sellers market, then you understand the pain of this that can come with going through bidding wars. If there's more than one interested buyer in the property, then this is going to happen into multiple offers and can quite often end up stretching your original budget significantly, depending on how many offers are on that property. Number 2. Number 3, higher upfront cost. So with resale condos, you need your 20% down payment today if you wanted to, especially avoid the CMHC insurance. You need to do the 20% today. You need to get ready and prepared to pay for the closing costs today, such as the land transfer tax, legal fees. So all of that stuff needs to be paid out today, not in the future. And number 4 is the added long-term cost. Now, if you're buying something of an older resale condo, you may run up on higher maintenance or renovation builds compared to a younger, newly built project. So these are all the things to consider for resale condos. Next here, we have a great little case study and we do this for all three of the markets here on this ebook. I won't get into this now, but if you guys wanted your own copy, it will be in the link in the description. Or if you're watching on Instagram, it will be the link in my bio. You guys can get this copy to you. You can read through that. It goes through the numbers and stuff, so you guys have a better idea of what that would look like for you. Next, we have pre-construction condos. So for those of you that know us here at the Zading Group and Pre-Homes, we do a lot of pre-construction, pre-homes being our pre-con division. I'll put a link to the website below as well if you want to check that out. But what is a pre-construction condo? This property does not exist. It is what it sounds like. It is something that is pre-construction. So it hasn't been built yet. For condos, you're looking at anywhere for 3 to 5 years before it's being built, sometimes longer if it's a special type of property. Townhomes, single family homes are looking at 1 to 3 years. Also just wanted to mention that even though this is specifically to condos, the main points here can still be transferred and applied when looking at townhomes or single family homes, but we'll stick to condos here as stated. So for these types of condos, you're providing an opportunity to invest in tomorrow at today's rates. So looking at the pros here, you get to pick what you like. You got more options. Since it's a new construction, you can choose some customizations in the property. You get to choose your own finishing. You get to choose your own decor package. You also have more options in terms of floor plans. Granted that you get in and you're able to secure a unit, you do have options there. You're not at the mercy of what's available in the building, as you can pick what floor plan that you like. Number one. Number two, buffer time for payments. Now, this is the main pro that a lot of people look into pre-construction, is this buffer time for payments. What does that mean? Since the property is not ready yet, the payments for pre-construction condos, that 20% or 15% down payment is broken up into small 5% or 2.5% chunks, usually over the course of a year to 2 years, depending on the project. So a lot of first-time home buyers love this for pre-con, because even if they don't have 20% down payment today, but they know they will be having it a year, maybe 2 years in the future, this gives them that time to still get into the market today and buy themselves that time to come up with the rest of that 20% down payment. This is also great for investors, guys. For investors that are really looking to stretch their dollar and looking to leverage their money with split up payments to invest in more property, as opposed to putting all the cash up front in one property. So a lot of investors like this benefit that comes with pre-con condos as well. Number two. Number three, you got options. What does that mean? Because you got 4 or 5 years before this is even built, since the first payment that you make to your occupancy, you do have 3 exit strategies once it comes close to the building being completed. You can either hold on to it, you can close on it and move in if that's what you're going to do. You can close on it and start renting it out if you're an investor, or you can flip it on assignment prior to occupancy. So I mean, that's what's great about this. You can buy something today and you've got more than one options waiting for you at the end of the line if you so choose to exercise them. Number four is carry-on warranty. Now, with pre-construction condos, they are all covered by carry-on warranty. This is a program that all new builds must have. It is there to protect you as the consumers, protect you against your deposit, and as well as if there's any deficiencies after it is built. There are certain criterias over the course of, I believe it's 1, 3, and 7 years. That carry-on will cover those repairs for you. Now, looking at the cons. Number one, of course, because it's not built, there is no option to move in right away. So if you're looking for something that with an immediate possession, then pre-construction might not be the best fit for you. Or if you're an investor looking to start generating rental income right away, again, pre-con might not be the best option for you, as of course, it's not built yet. So you can't move into it right away. Number one. Number two, like I said here with the investors, you can't start generating rental income, right? You still got 4 or 5 years, you got to wait till it's made, after which you can get a tenant and start making that rental revenue. So here are the pros and cons on pre-construction condos. Again, we got a great case study here that goes through an example with all the numbers of what it would look like if you're getting into a pre-con. Again, we won't get into it here, but if you'd like, you can get in the link below to get this sent to you for your own review. Lastly, we've got assignment sale condos. So assignments are still considered pre-con because it's still something brand new. But the main difference here is that you are buying the rights to a unit from a seller who was a previous buyer of a pre-con. So let's say person A has bought a pre-construction unit from a builder, let's say 4 years ago. It's now 1 year before the occupancy time, and they're looking to sell their unit on assignment. You would be buying their contract that they have with the builder. Now, this can be because in the years of having the unit, they've had different plans. Life happens in 4 or 5 years, a lot can happen. Maybe that original buyer, they moved jobs to a different city, they have no use for it anymore. A lot of things can happen, but this is what an assignment sale is. You're buying the contract from that a buyer has with the builder. Looking at the pros and cons here, number one, you can get a better deal here. What does that mean? Because a deal is very subjective to your case, but in this case here, I'll explain it. Typically, as a buyer of an assignment sale, you're getting a better deal compared to brand new pre-construction projects that have launched today. Very simply, we've got some numbers here that we'll go through. If the seller, for example, has bought a unit, let's say 3 years ago for $500 a square foot, and now they're selling it for $700 a square foot. The seller is making about $200 a square foot profit on their unit. Now, on the other hand, in terms of your case, when you're buying, the new builds in the area are selling now for $900 a square foot, the brand new pre-con projects that have just launched. So now you as the buyer are now saving that $200 a square foot. You're still getting something brand new that has never lived before, but you are saving a little bit there compared to new projects that have just launched. Number one. Number two, oh, little typo over here. But number two, you have less competition. So assignments are not like resale. You don't see 10 to 15 offers, multiple offer situations, bidding wars. It's not common to see that in assignments. Reason being is that assignments are all done off market. So nothing is on the MLS. It's all done through networking and off-market channels. So there's a lot less visibility to these listings. So you as a buyer going into an assignment, you have far less competition. It's usually just going to be you and the seller hashing it out to make a deal. And number three, if you missed your chance on a pre-con. So let's say you were eyeing a particular building, a new building that was being built, and you had already missed your opportunity to get in at pre-construction pricing, then assignment sales is a great way to still get that building that you're looking for, still get that new build through the assignment, because you're still able to buy that unit that you're looking for in that building. Now, the cons. Now, this is a big one, which a lot of people end up steering away from assignments, but if it's okay with you, then this is a great avenue. The cons are higher upfront costs. So typically, depending on the assignment, all depends on the numbers and what's being sold for, but typically you would need to have more cash upfront over and above the 20% down payment. Typically, the payment structure is the full appreciation plus the deposit paid on consent. Now, what does that mean? This means that if someone, let's say, bought for $500,000 pre-con and is now selling on assignment for $600,000, the seller is asking for $100,000 appreciation. The seller has also already put 20% down payment, which 20% of the $500,000 would be another $100,000. This means the buyer, you, the assignee, who is trying to buy this assignment sale, you need to put up $200,000 upfront cash to purchase this unit. So that's the 20% down payment that the seller already paid, plus the profit portion, the appreciation portion, which is the asking price minus the original price that would need to be paid. Again, this is case by case, depends on the assignment, depends how much it was bought for, depends how much it is asking, but that is the general structure. It would be the appreciation plus the deposit paid on consent. Now, with assignment sales, the kind of buyer that is looking for this, again, like I said, are people that still want something brand new. but don't want to wait 3, 4, 5 years. You want something brand new that it will be ready in maybe 6 months to a year and a half. They have a little bit more cash up front that's doing nothing for them in the bank. So this can be a great opportunity for you if that matches the criteria. So that's pros and cons here on assignment sale condos. Again, we go through a case study here, going through the numbers of what it would look like for you as a buyer. Really great stuff here, guys. If you're wanting to go through this again, just link in the bio and you guys can get a copy for it yourself. And lastly, we just summarize everything here with some key factors here, including familiarity with the property, cost, time to move in, condition, maintenance costs, ease of financing, rental income. And it's very nicely laid out here with the 3 types of asset types. We won't go through this because it's a lot, but again, you guys can get a copy of this and go through it. And that's everything, guys. It's a great ebook. I hope you guys learned a lot. Again, if you're looking to read up on this on your own time, the link is in the description or in my bio if you're watching on Instagram. You can go get that copy for yourself. If you're thinking about investing in a condo or buying a condo for yourself, because even though we lay everything out here, everything is case by case. It all depends on your situation and what your goals are, your financial situation. So if you want a little bit of help navigating that, do feel free to give us a call. My number will be in the description and we're more than happy to help. Thanks so much. See you guys in the next video.